Welcome to In It to Win It. This is Steve Barton, and thank you for tuning in. We're here for Monday Market Moves, what happened last week in the markets, and what I expect for next week. A little bit of housekeeping. Markets are going to be closed on Monday, February 17th, because the stock market is like your local bank. It's never open when you want it to be. We'll be recording with Garrett Goggin and John Palladium next week, so get your questions in under the post, under the community tab. And Matt and Joe, thank you for the donations. You guys are gentlemen and scholars. The portfolio, I've been meaning to get to this for a month. For 2024, we're up 26.3%. So we beat 2023 by about 6%. So that was pretty cool. Had I sold a little more uranium when it was $106 a pound, we'd be up even more, but I can see straight looking backwards. Alrighty, let's go to the charts. Starting out as always with the S&P 500. So almost got a new all-time high. It was within literal pennies of it and just didn't quite get it. Our sawtooth pattern that we were hoping would play out again didn't happen. I don't know why I wanted that to happen. I think just because it would look cool. But looking like it's going to go up next week. Oh, I changed a couple of the colors on these moving averages. So yellow is now the 200-day moving average. Blue is the 50 and 20. Green is the 20. Just for a heads up. You might have noticed the colors changed. Looking like it's probably going to go up. So I would guess that it's probably going to get caught by this 20-day moving average, and we'll probably hit a new all-time high in the S&P 500 next week. Alrighty, it's up 1.5%. The DXY is down 1.2% for the week. So bias is going to be down to the 106.50 level. It came within pennies of that, so it basically already bounced on there. I would expect that it'll probably trade a little bit on this next week, but the real support after that I see is going to be around this rising 200-day moving average, which is just shy of 104 and then, just shy of 105. And then after that, we got quite a bit of support on the DXY at 104. But it looks like the RSI and MACD are continuing to angle down, so I would expect the DXY to go down next week. And the 10-year yield changed negative 0.3%. So, as far as a change, looking like it's probably going to come down here and touch the 4.4%. That would put it at a 61.8% retracement. So it kind of create a little double bottom here. But I do expect when you run the extension on this, the Fibonacci extension, it brings it up just north of 5%, which lines up pretty nicely with this top over here. So that's where I would expect it to go. And the 10-year yield minus the 2-year yield, just still kind of trading in this range. The 10-year yield is paying about 1/5 of 1% more than the 2-year yield, and that makes sense because long duration debt should pay more than short duration debt, so we're no longer in upside down clown world, we're in normal times. And your cash is still paying 4.3%, so all those money market accounts, that's what you're getting. And the LQD, so this is the little hot tip that we got from David. And basically, I was talking with my buddies on this, on when we're going to bet it. And we're going to see if we can hold out until it gets up to like this 110 level. The risk with this is if and when we get some type of liquidity crisis, when corporate bonds have a hiccup, this thing's going to do a 20x and you're not going to know before it happens. It's just going to go and that's it. You need to hold it before. So we may be picking up nickels in front of a steamroller here, just trying to dissect this thing. We should probably just buy it and forget about it. But anyways, not a whole lot of volume going out for, so, you got to set your limit orders. All right, and gold. We hit another new all-time high. 2,968, just within spitting distance of 3,000. So remember, we don't want to be buying any gold stocks here. We want to be buying it when we're down and, we got low RSI and all that. So what's interesting here, let me pull up the weekly chart and we look at the weekly bar rate here. Okay, so if I zoom in on this, you guys can see this bar right here and what that looks like, right? So basically what that means is price action went up, touched up there, and then came back down. That's a very bearish looking bar. The last time we had a bar like that was right here, and look at what happened. We got a nice little sell-off here of, what is that, 9%. Another bar that was not quite as bad, but we had one right here similar and had a little sell-off of 6%. And then the time after that, let me zoom over, I think it was in 2022. Yeah, right here. Sorry, 2023. So not quite as bearish as that one, but still a bar that looks like that nonetheless. Comes up there, had a pretty immediate sell-off of 8%. And there was one more in 2022. So there it is. That's it right there. Okay, so from here, then the immediate sell-off was down 13. And if you want to take it all the way until when it reversed, went down to 22%. So pretty big sell-off there. And I kind of expect something similar here. I would expect a correction of at least a few percent, you know, with a candle looking like that, with a bar like that. So we'll see. This is what Lobo had to say in his free weekly report. He said, "You may not want to hear this, but it's my job to offer the best guidance I can, not to tell you whatever I think you want to hear. The bad news is that if I'm right about the Fed being forced to hike rates again, the pivot could whack gold because it doesn't pay interest, right? Why would people buy gold if they could buy bonds and get paid something, right? This could turn into a major correction after gold takes out a psychologically important round number like 3,000. As perverse as our world tends to be, I must say this would seem likely. On the other hand, taking out that round $3,000 level could be just the thing that ignites gold mania." Read his free report, sign up for it. I love it. For me, it is a must read every week. There's a link down in the notes and in the pinned comment below. So I could see either one happening, but honestly, I'm a TA. So when I look at that bar right there, this looks like gold is going down next week, and that would drag down the equities with it. The exception could be, we got some earnings reports coming in. So if we have good ones, that could boost it up. All right, and gold divided by the S&P 500. So last week, the ratio was 0.479. Now it is 0.474. So the S&P 500 outperformed gold. And CEF, physical gold and silver, is up 0.5% for the week. So looking like we're just getting some new little all-time highs right here. That's pretty cool. PHYS up 0.7% for the week. So there's no buys on any of these this week. They're just shooting the moon here. You know, we want to be buying down here on these support lines. And honestly, I should probably move some of these up, figure out where $2,500 gold is on this thing and put it right around there. Probably around $20.50, somewhere around there. GDX, let's see, up 0.5% for the week. So Sam says you'd have to be insane to sell gold now. He says, but if I did sell it, uranium is what I'd buy. Jed says, if your basic thesis is gold, silver, and mining stocks are in a bull market, then you buy the dips and you don't sell the peaks. And David says, sorry, Steve, now is not the time to sell your gold and silver stocks. Well, gentlemen, you'll be happy to see this. I sold 20% of GDX, and basically all I'm doing is, 90% of my portfolio is, I don't trade it, right? It's just buy and hold. It's boring stuff like, ExxonMobil, and it just pays me a dividend, right? The other 10% I run options on, and I do kind of short-term trades. This part is actually part of my long-term portfolio. So you can see here, I was buying GDX down here, and I trimmed some up here. And then what I sold up here, I bought down here, and then sold it again up here, right? So I like looking at these charts. I like making an extra little buck, you know what I mean? Like from here to here, lost, 14%, and then just rinse and repeat and do this thing again and run it up, right? I love doing this. It's a lot of fun. And I see gold right now as overbought, and I see uranium as oversold. And so I, buy undervaluation and sell overvaluation. And I I think gold's going to 10,000 probably over the next, 4 to 5 years. But I do think that there's going to be some pretty volatile pullbacks along the way. And if you can find little moments like this where you can trade it, why not? I like it. It's not for everyone, but it is for me. So I took 20% off the table here. And basically what I did, let's see. So gold was 21.6% of the portfolio. Now it's 21.1. So I sold 1.5% of gold. Silver was 4.9% of the portfolio. Now it's 4.4. So I sold half of 1% of that. I sold one position, more of a trade than anything else. And then uranium was 8.6%, and now it's 9.8. And the extra little bit, 2% that I threw in Glencore. Anyways, I bought URNM and SRUUF. So rounding out as far as like where I stand now. So I know a lot of you guys, most people not in the comments of the show, but I got a lot of emails of you guys that are doing the same thing. So this is where I stand, and I'm rounding here. So if it doesn't add up perfectly to 100%, that's why. Cash 23%, gold 20%, silver 4.5%, uranium 10%, energy 23%, copper, nickel, coal, and PGMs 20%. Of that, copper makes up almost 5%. I think I need more copper. Anyhow, so that's where I stand. I think that, if you have any of these long positions on gold that, at some point you have to sell, and at some point you got to pay yourself. And when you get really stretched technicals like that, I think it's a neat time to do so. All right, GDXJ is down 0.5% for the week. Wouldn't fault anyone for taking some profits here. I know a lot of you guys got in right down here. Unfortunately, I didn't move the green arrow up to 42, probably where it should have been. But I know some of you guys got in there. You've had a nice little run here in GDXJ. What is that, 20%? Franco, Nevada, down 2.1% for the week. So I almost took profits here on Franco, Nevada. And my conversation with Adrian Day stopped me. He said he believes that there's no question that Cobre Panama is going to come back online. So that's one of the things that stopped me there, but I darn near did it. I was so close. I was like, okay, if it hits 145, I'm probably going to take a little bit off here. I mean, we've had a heck of a run, and I think it has more to go, and this is going to do fantastic in the gold bull market. But it's tough to argue with that. Wheaton Precious Metals up 2% for the week. So new all-time highs. Now this is very stretched. So, any profit taking here wouldn't shake a stick at anyone for doing that. Gold Royalty Corporation actually had a little breather here. So fell back 4.8% for the week. Adam was saying that he thought, maybe it's just, if he had to guess, and probably me too, is that it's basically just kind of a premium from the VRIC. People found out about it and bought in, but got pretty stretched here in the technicals. RSI got all the way up to 76, so it's taken a little breather. Origin Royalties up 4.8%. So this one's looking absolutely fantastic. I don't see any buys here. You guys have been in with this one for me for over a year, and so took a little profits right there and then started buying more here as we got more information on Altius. And I think now we're basically just in the waiting game. We got a month and a half, maybe 5 weeks before we get the real information and this thing revalues, and then we can take some profits here. So how did we get into this company? Well, I'll tell you, boys and girls, we got into it through the Rule Classroom, and you can join right now. It's my favorite price. It's free. You can get it as an app on your phone. You can listen to all the content on your drive to and from work while you're at work. Just don't tell your boss. And for more serious investors, there is the Rule Classroom Plus. Now, you can try this one out for free for 2 months. And after that, if you love it, which you will, it is $39 per month. Adrian Day just put on an options class, which made me realize I need to start doing a bunch of covered calls and sell puts, which I did this week. So thank you, Adrian. And we also had Brian London and Joel Littman on. So I'd love to see you guys there. Link is in the pinned comment below. And Barrick Gold is up 5.3% for the week. So we had a positive earnings report come out here for Barrick Gold. And it shot up like 6% in a day. So that's pretty cool. Now it's up above the 200-day moving average and just came down and kissed it right there. So hoping the 200-day moving average holds. It probably won't, just because look at how stretched we are here in the RSI. Best thing for Barrick right now, I think, would be to move sideways, because if the gold goes down like I think it's going to, this is probably going to go down as well, but hopefully it'll get caught by that 200-day moving average. Got a lot of rising volume, looking great. Newmont is up 3.8% for the week. So they have an earnings coming out on February 20th, so that'll be Thursday. So a lot of you guys had your orders hit down here for Newmont. You're up, what is that, 25% or something? And yeah, 25% in just a few weeks. What was that, 5 or 6 weeks? So take what you want from it. This is one of the positions that I sold a bit of. I only sold 12%, so not much. But just take a little bit off the table. At some point, you got to pay yourself. And Agnico Eagle is down 2.5% for the week. Their earnings seem fine to me, but I guess they were slightly less than stellar. So we had a small pullback. I'm past the point of concern on this one. This I own for free, so I have no interest in selling anymore. But if I did, I'd probably do it around the $100 level, or, I mean, you guys got in like I did down here at 45 bucks. You've got more than a double, you know. B2 Gold up 0.4% for the week. So my plan with this one is once this white line is reached at $3.40, so got a lot of back support right there at $3.40, that's when I will exit the first option. Hopefully that happens before this. It'd be nice if it happened by June or July. And that's when I'll exit the first option. Then I've got a long dated one for 2027. And Equinox Gold up 2.3% for the week. So I told myself, if, you know, the if then statements, if the price action reaches this upward white line, I will take profits. If it doesn't, then I won't. And it got within like 20 cents of that. It was a little frustrating. I was like, maybe that's a blessing in disguise. But anyways, didn't reach it, so I didn't take profits. If gold goes down, this one's going to get hit as well. And, oh, you know what? When is their earnings? I think it's coming up in like a couple days. Yeah, February 19th. Okay, Wednesday. So keep an eye out on that. Actually, their earnings is probably going to be pretty good. So maybe it's good it didn't hit. Okay, G Mining Ventures is down 3.7% for the week. So took a little profits here, almost moved past the point of concern. Once it was in the 11s up here, I was like, that looks like an Ireland reversal to me. And I don't know how much I can put into that just because there's not a whole lot of volume on this. But yeah, I mean, that's a pretty textbook, like, looks like it's going to turn around right there. I probably should have just moved past the point of concern, but whatever. Like I said, hindsight's 2020. And Rio 2 is down 4.3% for the week. So construction is commencing. And let me get these out of here so you can see. So it looks like we're ironing out for a cup right here. So we got continuation pattern. Cup is coming down right here. And it looks like we're starting to iron out the handle here. So that's pretty exciting. What we're going to want is we are going to want this to not retrace more than 50% for sure, but ideally right down here to 38.2%. So if it looks like we're starting to get a handle right down here, I'll probably be entering around 51 cents or so. So, you know, I think this 38-cent limit order down here is a pipe dream, and I will treat it as such. And silver is up 1.3% for the week. So this is pretty interesting. What happened here, let me go out to the 30-minute, and then this will, see, you'll probably recognize this bar that looked just like the gold one. So that if we put this in candles, you know, that's what it looks like. And it is a very bearish candle, not quite as bad as gold, because gold was on the weekly, right? So if we put this on the weekly, it doesn't look so bad. It looks like silver's going up. But on the daily here, that does not look so hot. That looks like That's a very bearish bar right there, making it look like silver is probably going to get cheaper next week. It got slammed. Let me go to the 30-minute here, and it got slammed by the American market. So basically, there's Thursday, American market closed. You know, Asia just ran it up, and then right around here is where you can see the American market is opening up, and it just slammed it back down. So it went from 33 bucks and then all the way up to 34. And then it took Americans about an hour and a half to beat that thing down to 33, and it closed the week at 32.65. So, yeah, that was a bummer. But you know, if gold's going down, then silver is as well. And yeah, that's just the way the cookie crumbles. All right, gold divided by silver. So the gold-silver ratio is now 88-1. So kind of still hovering around this trend line right here. The blue line is the 50 moving average. PSLV is up 1.3% for the week. Now, yeah, there's no buys here. And yeah, I would just say kind of anywhere around this rising 200-day moving average. Stink bid around $9.50. And SIL is up 0.7% for the week. So up a little bit for the week, but yeah, basically rising 200-day moving average might be your entry point. But look at how high the RSI and everything is on this. Hopefully this starts to break down and there might be some more entries down here around 32 or 30. SILJ down 0.3% for the week. Same kind of thing. Limit orders down here, $9.75 to $9, somewhere in that range. It punched through the 200-day moving average for a hot minute and then sliced right back down, just like silver itself. If we go to the weekly here, we can see that it looks like it's just being caught right here by the 200 weekly moving average. So maybe that will act as support, although I don't think it will. I think it'll just slice right through it. Pan American Silver is down 0.4% for the week, so almost took profits on this one again. I did the same thing over here. Once it got up into 25, I was like, okay, I should probably take a little off the table. And, you know, I didn't. And then I was doing the same thing this week, and I'm like, I should probably take a little off the table, and then I didn't. And I'm basically waiting up here for 28. And yeah, there you go. I can see straight looking backwards. Almost only counts in horseshoes and hand grenades. Endeavor Silver up 3.1% for the week. So maybe follow this white trend line. So far, it seems to be fairly accurate. I mean, we've got a point down there, one there, and then several right here. It's not exact, but you know, maybe anywhere around the 200-day moving average. I still really like a limit order down here at $3, just because this is such a volatile one. I mean, you can see these moves here. I mean, just radical up and down, right? I don't think it's anywhere out of the realm of possibilities that $3 could get hit. This was the 0.5% position that I sold, and I basically bought this because I liked what the guy had to say. It was at a point where silver was basically, I thought that it was likely that silver would go up, and this was a very, very, very leveraged play on silver, and it turned out that I was right. In the same time period, silver ran up 6%, and this one ran up 40%. So I sold my position and then put it into uranium. And copper, paging Dr. Copper, up 1.7% for the week. So we've been saying for a while, buy on weakness. That's definitely not weakness, but came right up here, almost in line with the previous point in September, and then came back down. So getting really stretched on the technicals, natural for it to work its way back down. And this is one thing that Lobo said on copper in his free newsletter here. He says, I'm far from convinced that it's safe to assume copper is off to the races at this point. I can't bring myself to jump on the copper bandwagon when a word from Trump could send the whole market into a tailspin and create spectacular buying opportunities. I listened to his talk out at the VRIC, and one thing he mentioned was he said, you know, why not sell puts on copper stocks that you like. And I thought, you know, that's absolutely brilliant, because basically what you're doing when you're selling a put is you say like, hey, I think that, you know, let's say you could do it on copper itself here. I think that it's likely that copper will go down to $4. So I'll sell a put there. If it doesn't reach $4 by the time frame that I designate, you know, then I collect a premium and you essentially collect rent. If it does reach $4, then I'm put to the stock and I have to buy it, right? So I'll show you where I did that here in a moment. Okay, gold divided by copper is now 621 pounds of copper for 1 ounce of gold. And COP.U, so we're still at a pretty massive discount because copper has run up so much. It is at a 17.2% discount. So I would be more inclined to wait for copper to correct down a little bit. You might get a little bit more of an edge here on this one. We'll see. So this is the one that I sold puts. So COPX, wrong entry point. What the heck did I mean by that? Oh, okay. This one, I had a limit order for $38 set forever, like when it was up here. And when it finally got down to $37.95, I just assumed that the order hit. So I had my little arrow over there. Apparently, even though the share price got lower than my limit order, maybe I had more shares than were available. I don't know. For whatever reason, it didn't hit. It finally hit over here a couple of weeks ago. So anyways, I moved the arrow over to where it should be. I don't know that you guys care that much, but just in trying to be fully transparent, that's what happened. So this is the one where I sold a put for $38, and basically what I'm doing is I'm collecting, I think it was $45 for every contract, and the contract's only a month long. So if COPX does not reach $38 by this time next month, I collect $45 a contract. If it does, then I'm put to the stock and I basically get my $45, and then I would buy it at $38. So I'd essentially get the share price for me would be, what is that, $37.55. Okay, kind of cool, right? Thank you, Lobo. I appreciate that. Good tip, sir. So I'm going to be doing that on COPX. And it got me thinking here on COPJ. Well, actually, it was my buddy Eric that mentioned this. And he said, this one's up 3.3% for the week. And he's like, you know, what if you took your money out of this one and actually just sold a bunch of puts in COPX? And I was like, well, this one's really leveraged to it a lot more than COPX. And he's like, is it? So then I started taking the measurements here, and we'll take this last run up right there. And this one's about 60% on COPJ. And then if you take the same time frame on COPX, and this one is like 55%. So why am I taking the extra risk if it's not giving me that much more upside? The market cap, assets under management under COPJ, I think is like 13 million. So it's not a whole lot. You know, it's not very liquid. You sure as heck can't sell puts on this thing. And so I don't know, man. I'm not really sure why I figured it would be a lot more leveraged, and I just assumed it was. But now that I start taking these measurements, it doesn't really look like it is. We just need more people to pile into this thing to give it some more liquidity. But in the meantime, I may be exiting this position in accounts that I can run options on with COPX. So just a heads up there. And Freeport is up 3.3% for the week. Not a whole lot here, kind of middle of the road RSI and everything, just like limit orders around $36, $33 would be the stink bid. And Maduro Capital down 1.8% for the week. Nothing new here, waiting on BHP to hit a massive drill hole. And uranium down 4.3% for the week. So this is getting really cheap. Yeah, I brought up the spot versus term price before, and here we'll do it again. So this is thank you Cameco, and so this is the last couple of years of action, and the dark line here is the long-term price, which last month it closed at 81, and then the uranium spot price, I'm not sure why it's not going all the way over there it is, 81, and then spot price now is 66, as we just saw in the chart. So yeah, I sold 1.5% of gold. portfolio, and then 0.5% of silver. So that was that Argenta position. And then I put it into uranium and then a little bit into Glencore. And basically, what I'm looking for here is I'm trying to buy on this end of the chart and sell on this end of the chart. And so gold's up at this end, so I'm selling, and uranium's down at this end, so I'm buying, right? And there are some rumors out there which has me a little concerned, and Trump and Putin could be doing another megatons to megawatts, essentially taking their nuclear arsenal and putting it into power plants. And that would be amazing for mankind, but that would be horrible for our uranium bet. The spot price is down to 66.40. And so SPUT is advertising a discount of 8.13%. So essentially, you can buy physical uranium right now through SPUT at $61 a pound. Now you take 66.40 minus 8.1%, you get $61 per pound. And if the term market is accurate, and U308 is actually selling at $81 a pound 12 months from now, that's essentially a 25% discount. So that's essentially what I'm betting I'm basing my bet on. I don't know. I mean, like, man, when that chart just keeps going down, it's not easy to press the buy button. But it is getting pretty cheap in relation to gold here. So uranium is, let's see, it takes almost 44 pounds of uranium to get 1 ounce of gold. Here's the one that I was putting it into. So Sprott Physical Uranium Trust, I'm picking it up down here around 15 bucks. And Cameco did not get any of this, but first limit order that I see around here, this one's down 5.5% for the week. I kind of like it right down here around 46.25, 46.30, somewhere in that range. Got a decent amount of back support back there, and then a stink bid at $41. This is the other one that I put it into, was URNM, down 5.7% for the week. This chart is at risk of breaking down. So if this trend line means anything, and I think it's been fairly valid for a while, it broke below that, and it closed weekly below that. Not good. So the next level that we got is right around 37, and I'm just lining up with this double bottom right back here, right around 37 bucks. But then after that, the major price action that we got on this thing doesn't come in until around $33, $34. So we could have another 12% downside on this. That's a risk. But that's why we're in uranium, because it's amazingly volatile. Like this one, 103% run. We made so much money on uranium. We're trying to do it again. And URNJ down 7.3% for the week. So pretty nasty looking candle there on Friday. I put in a limit order right on our green line, $17.50. If you had a limit order up in here at $18.50, congratulations, it finally hit and you're in. And Uranium Royalty Corporation is down 10.7% for the week. So kind of fell below the 200-day moving average. Middle of the road technicals, but everything's pointing to the downside for this one. And Uranium Energy Corporation is down 8.1% for the week. So if you had your starter position on this 200-day moving average, you're in. Congratulations. Your next entry is going to be $6.25, and then a stink bid down in here for $5.50. I like that 625 quite a bit. We got a rising 400-day moving average, and it's right there with a bunch of back support. Crude oil, WTI, is down 0.4% for the week. Looking like we're probably going to come right into around 70. I would expect crude oil to stay between $67 and $70. And Brent is down 0.4% for the week. I would expect that one to stay between $72 and $73. And gold divided by crude oil also takes 40, last week it was 40 barrels of oil for 1 ounce of gold. This week it is 41 barrels of oil for 1 ounce of gold. It's up 0.8%. XLE, favorite oil ETF, kind of middle of the road everything here, but the one thing I see is we do have a bit of a retracement here. So coming right down around the 61.8, that might be where I'd set a limit order, or at least be watching when it does it. See, like how we got that nice little reversal bar right there on at the beginning of the month. So that the price point would be around $87. And ExxonMobil down 0.6% for the week. So I thought we might get another opportunity here on their ex-dividend date, which was Wednesday of last week, to get it again at 105 like we did back here. It got pretty close to it. I mean, I'm within a buck or so. Yeah, what was that? 106.52. So it was within $1.50 or so. So it didn't quite get there, but hopefully this will come back down. If we get a little bit more selling pressure in WTI, then I think we'll get another opportunity for 105. And Chevron is up 1.8% for the week. So same kind of thing here. Got another retracement for the 61.8. That would put it right down at 148, 149. And Canadian Natural Resources is down 0.8% for the week. Still in an overall downtrend. I mean, I mean, everyone could see here it's on its way down. But where is the where's the bottom here? Where are we going to call the bottom in this thing? Middle of the road technicals. You know, I wrote this. I think I moved it down 50 cents. Yeah, I moved this down another 50 cents to 29.25. But I really don't even like that level. Although there is a lot of price action around that level. I'd have to see what it looks like when it gets there. I don't think the RSI will be low enough at that point. I like 26.50 as a set it and forget it a lot better. And Blackstone Minerals is up 2.4% for the week, so looking great. Last week I said that they picked up a copper and gold project in the Philippines. Completely disregard that. Adam set us straight. Part of the Rural Classroom Plus, Adam. Good to see you here. Adam, he says, let us know pretty quick. Oh yeah, Blackstone Minerals didn't pick up a copper gold project. That was Blackstone Minerals BSX on the Australian exchange. So same names, different companies, easy mistake to make. Well, you didn't make it, sir. Thanks for catching it. And Freehold Royalties is up 0.2% for the week. Limit orders down here at $12.25. So I drew in the dividend amounts. If you get this stock at $13 a share, that works out to an 8.3% dividend. If you get it down at $12.25, that's an 8.8% dividend. They pay 9 cents a month per share. Natural gas is up 12.6% for the week, so absolutely killed it. I'm not sure if this is ironing out to be a bear flag or not. Doesn't look like it, no. Anyways, just dropped out of the sky and then starting to come back up. Middle of the road technicals. Looks like it might be on its way up for next week. I bet this is a retracement as well. Let's run it and see what it looks like. What do you guys think? Yep, look at that, 61.8, like magic. So we could actually run an extension on this one, and I will do so here for you. So we'll take from the bottom to the top, bam, to bam, to bam. So it hit right at 61.8. So we could get up to, on this next run, it could go up to $5.17. And Devon is up 4.5% for the week. So that gap we were talking about last week didn't quite get filled. It might, but it is right in the retracement here, if my eyes serve me well. Yeah, it fell just a tiny bit below it. So maybe that gap will get filled. We'll have to wait and see. If you have Devon, that's probably not a bad place to put a limit order. And Woodside Energy up 1.1% for the week. I might be cutting my losses on this one. I put in a sell order right there at 16.25. Nothing super scientific, just lining up with the last high right here. I think I'd rather move to cash in this one or possibly uranium. It's not a very big position for me. It's just kind of taken up space, and it has done absolutely nothing except disappoint and go down. Although I do got to say, after this, why is that off? Oh, there we go. It does kind of look like it's putting in a bottoming pattern right here. See how we've just started to get higher lows? Okay, so maybe we're on the turning the corner here. All right, and Birchcliff is up 1.3% for the week. It is just under the 200-day moving average, so I don't really see any buys here, like a stink bid down here with the recent low price. But gun to my head, if I had to put a bet in, it would be right there at $3.55 because that's just lining up with some recent back support. And Pado is up 1.3% for the week. So I know a lot of you guys got lucky right here with this nice sell-off. I can't remember who it was, but somebody got it for, I think, $10. So that was pretty sweet. So good on you. And next limit orders that I have are down there at $9.75 and $8.25. And that is just lining up with some back support here and hoping for another moment like that. And coal. Thermal coal is down 5% for the week, 5.1% for the week. Now this one fell below Matt Warder's expectations of the floor. So he thought the floor was going to be around 110. It fell $5 below that. We'll see what happens next week if we get a rebound. And met coal flat for the week. So still staying in between the 180, 220 range that he forecast. And our favorite coal ETF is down 2.8% for the week. We got 10.2 million assets under management, 530,000 shares. Got one limit order in down here, I think, for our final limit order, and that's going to be at $18. And Glencore, this was one other position that I took some of the gold profits and moved it into. Basically just buying on this end of the chart, selling on this end of the chart, right? Buy assets that are cheap, and I think Glencore is getting pretty cheap. So I moved it into Glencore. We'll see how that one irons out. AMR is getting absolutely smoked. I think I'm down over 30% on this one. And the only reason it's not more is because I bought one right here. Yeah, just absolutely getting washed out. I hope that Warren Irwin is right and that met coal is one of the most hated commodities, because if it is, then we're we're buying at a good point here. And BTU Peabody is down. No, I'm sorry, it's up 1.8% for the week. This option is going to expire absolutely worthless. I guess I could have got a little bit for it, like right there, but you know, again, now that I could see the future, I know what I would have done. They paid a little dividend here, and bad earnings call. Just everything's going wrong right now for this one, unless you have a put instead of a call. And platinum is down 0.2% for the week. So I think I thought we were really close to a breakout here. So some of these trend lines that I drew, okay, so I can get rid of that one now. And this one, it just touched and then came right back down. I think that's probably the most important one. Maybe it's this one right here, but either way, we are darn close to a breakout here, but it looks like you're going to get another shot on platinum. It's probably going to correct back down at least the 200-day moving average. By like best buys for platinum are right around $900. And if you just want to do it on the stock market, PPLT is the one for you, and that is up 0.7% for the week. So starter positions at $85 just to get you in, and then after that, I like $82.50 and $80 for your limit orders or stink bids. And Palladium is up 2.7% for the week. So thought we might have had a breakout back here with this one. Not quite. Came back down. Still like orders. Yeah, I mean, same thing, around $900 for Palladium. And if you want to get it on the stock market, that would be $83 for PALL, which would basically equate to about $900 Palladium, and then a stink bid in for $80. SPPP is up 3.1% for the week. Still like the limit orders at $99, $8.75, and a real stink bid down at $8.25 that'll probably never hit. And platinum divided by silver, it takes 1 kilo of silver to buy 1 ounce of platinum. Platinum divided by gold, we are almost at 3 ounces of platinum for 1 ounce of gold. So if you ever wanted to get some platinum, and you got some gold, might not be a bad time to trade it, although that is pure speculation. You're trading real money for an industrial metal. Nickel is down 1.9% for the week, so finally catching a bid here. Looking like this, hopefully, this 15,000 line is going to hold. Nothing I could do to make it hold, but hopefully it does. NIKL, okay, one of the most hated commodities on the planet, nickel right now, nickel sulfide. NIKL is down 0.8% for the week, so hopefully that little spike down there was the limit. We'll see. Centaurus Metals, very leveraged play on nickel. I think you're going to get another shot here at 21 cents. So we've had this 21 cent limit order forever, and I think it's going to get there. If you don't want to be super cheap like me, I think now's fine. You know, maybe 22 cents, but I think 21 will hit. And iron ore is up 0.4% for the week. It's kind of trading in the middle of the range here. I don't really see anything technically that would sway me one way or the other than the RSI is pretty bought right here at 66. So if anything, it's probably going to retrace back down a bit. And BHP up 2.4% for the week. So move the green line up to 48.50. That seems like a pretty good floor right now for BHP. Basically like this anywhere below 50 bucks. And Rio Tinto up 2.3% for the week, had a spike up, hit the 200-day moving average, and then settled right back down. But moved this limit order up to 58.50. So like that one a lot, got quite a bit of back support right there. And where are we at? PIC is up 1.7% for the week. And where are we at? Lost my place in line. Okay, there we go. All right, so limit orders around $35, I think is pretty good. I updated these holdings amounts, so most of this is BHP, then Rio Tinto, then Freeport, and then Glencore. So they got a pretty core position in a lot of the companies we like. Pays a little dividend, like it a lot. Now, in the live chat last week, a lot of guys were talking about dry bulk. And I don't follow this. I don't feel at all classified to value this in any way. However, I cannot help but see here on the charts. I mean, man, that looks like the time to buy. I remember we pulled this up. It was back here, and someone brought it up. I can't remember who. And I was like, yeah, that looks pretty good. That looks like a nice little low right there. And my word, we had quite the run up here. Look at that, over 200%. So I know some of you guys got in this and now you're getting excited again, and you're probably right. It's probably going to do amazing. I just don't follow it. I don't feel qualified to, and I would just be a guy betting on a chart. That's it. I would have no fundamental understanding of this. But yeah, I see what you're seeing, and looks great on the charts, overall. Maybe wait for it to correct just a tiny bit more, but again, you might be picking up nickels in front of a steamroller. Just get on the train. Here's another company that you guys brought up, Zim, another shipping company. Yeah, essentially bet, buy on this end of the chart, sell on this end of the chart, right? Here's another one, Maersk. Yeah, buy on this end of the chart, sell on this end of the chart, right? And okay, and rounding out, Bitcoin is, as of this moment, recording on Saturday night, up 1.2% for the week. So I think it's still pretty high up here. If I was going to trade this at all, I would be waiting for it to come back down here at least to the 92,000 range, because for whatever reason, that just seems to be a bit of a short-term floor. Although I fully expect it to come back down here and touch the 78,000 level. Alrighty, well, I hope you guys got something out of that. Thank you for always being here. Be sure to check out the Rule Classroom and the Rule Classroom Plus, and also try out TradingView. It's free. It doesn't cost anything. There's a link down in the pinned comment below. I love that software. I couldn't do any of this without it, and I would have no idea where to buy and sell if it wasn't for this program. Alrighty, well, you guys have a wonderful rest of your day. and support the show. Be sure to share this with anyone that you think needs to hear it. It's probably your buddy that can't stop talking about tech stocks. You have yourself a great rest of the day, and we will talk to you next time.